What's going on, guys? So today I want to talk about taxes. So some subscriber on YouTube reached out to me and was asking about his tax situation. And I want to preface this by I'm not a CPA. I do my own taxes on TurboTax, to be honest, but I just want to talk about it at a high level so that you can sound educated when you're talking to a CPA who is licensed, who is an expert, right? So basically, his situation was him and his wife both work a full-time W-2, and they own a 3 unit I think triplex in Los Angeles, and was just asking, like, how can we take advantage of these tax advantages? And what he was kind of alluding to was, how do I get real estate professional status? Because when you get real estate professional status, that means that your passive losses from real estate, so if you lose money on real estate, if you do depreciation and it has losses, or you do cost segregation or bonus depreciation, that passive losses can offset your active income as a W-2. So that's how people pay zero or little in taxes, right? Whenever you hear people make YouTube videos talk about, how I paid zero to no taxes, usually they're taking advantage of the real estate professional status. So basically, to kind of break it down, so real estate income is passive income for the most part, right? If you're doing long-term rentals like me, that's considered passive income. So these are considered passive losses. So for me, I work a full-time W-2 as a pharmacy director, and that's considered active income. And because I make over $150,000, and I'm not a real estate professional because I work as a full-time pharmacist, whatever losses I have from my real estate, and believe me, I have a lot of losses from my real estate because I did a lot of renovations, I cannot use those passive losses to offset my active income as a pharmacy director, but instead that passive losses carry forward, right? So it carries forward every year until eventually I will qualify as a real estate professional. In that case, I can then use it to offset my active income. So the two best ways to become a real estate professional for me in my situation is either A, I have to get married to somebody who doesn't have a full-time W-2 and they work in the real estate business, right? So they could be a realtor, they could be a general contractor who renovates real estate, they can be a mortgage broker. I think the IRS, don't quote me on it, but the IRS lists a bunch of professions that qualify as real estate professional status, and you must work that real estate professional status for at least 750 hours a year, which is pretty easy to qualify for if you're a full-time realtor, if you're a full-time in construction, you're doing real estate development. So let's just say I got married to my girlfriend. She doesn't work as a pharmacist and she is a realtor full-time. In that case, collectively we qualify as real estate professional status, and then I can use my losses from real estate to offset my active W-2 income. In that case, I would pay zero in taxes. So I know a lot of real estate investors, husband, wife were both working and a W-2, and their real estate portfolio was large enough, where they own maybe 1 or 2 apartment complexes, 50 units plus. And it actually made sense for the wife or husband to step away from the W-2, so that once they stepped away from the W-2, at that point, they would qualify as a real estate professional status, and the amount of money they saved on taxes was more than worth it to leave that W-2 job. So let me give you an example. Let's just say collectively we make $200,000, and I'm at a 30% tax bracket. So that's around $70,000 that I pay in taxes every year for simplicity. So if I qualify as a real estate professional, me and my wife qualify as a real estate professional, then I can offset my $200,000 of active income. So let's just say I have $200,000 in depreciation that I can use to offset my $200,000 of active income. At that point, my taxable income is zero. So actually that $70,000 I paid in taxes gets refunded back to me. And that's $70,000 in tax-free income, which is, the equivalent to making like probably $100,000 in income. So in that case, it actually is worth it to leave. It's worth it to, be a real estate professional. So that's how one way to do it. Another way to do it is you can use the short-term rental or the Airbnb loophole, right? So with Airbnb, that is actually considered active income because you materially participate in the deal. And I don't know the numbers off my head, but I think you have to put at least like 200 or 500 hours into it. And in that case, despite working a W-2, if you put in X amount of hours into your short-term rental, which is a more active business, those active losses can be used to offset your active income, right? So to kind of summarize, you got to think about it as what's active income and what's passive income, right? Real long-term rental is passive income. Short-term rental is active income, assuming you materially participate and meet that qualification. For W-2, that's active income, right? And so what I recommend them to do is they can take their 3 units, convert that into a short-term rental. Then after you convert that to a short-term rental, what you can do is have you and your spouse manage it together, track your hours. If you qualify as material participation, then those active losses can be used to offset your active income. So that's why a lot of people are doing Airbnbs and short-term rentals, because it's active income against active income, and it's easier to qualify for that versus the real estate professional status. So overall, hopefully I didn't confuse you with all this. Once again, I just want to teach you at a high level so that you could talk to a CPA to get more details. But all the rules for real estate professional status and how to qualify, if you Google it, you'll find it. If you want to see how you materially participate in short-term rentals, just Google that as well. They'll give you the criteria. And the key, though, is if you take advantage of any of these tax loopholes, make sure you document your hours. If you're a real estate professional, document your hours that qualify. Create an Excel document, just document it. If you materially participate, document it, right? Like, let's just say I'm spending 8 hours showing 8 houses, document that on Excel. If you're maybe cleaning your Airbnb or your short-term rental and it takes you 2 hours, document that you cleaned it for 2 hours, right? Like, document everything. If there's a maintenance guy that's here, document that. So key is document it, because in case you get audited, you want to make sure you can show your records and show that you're compliant, so that you're legally, crossing your T's, dotting your I's, and make sure you're compliant. So, once again, hopefully you found value from this, and hopefully it kind of gave you a high-level picture of the tax advantages that real estate brings. Hope to see you in the next one. Thank you.